Welcome everybody to the Chinchilla Pickin' Podcast. It is November the 9th, 2025 at 4:12 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the Baron of Bonds himself, Brandon Beaver. Brandon, how are you?
I'm good. How about yourself?
I'm doing fabulous now that I just now, I know this is the third week in a row. You mentioned you don't have a mic. And you found one, but it's a headset mic. I just now ordered him a mic for all of you who are really concerned on Amazon just now. So it will be in the mail. Not in the mail. It's going to be delivered tomorrow. So that's weird. I ordered it right now and it's showing up in less than 12 hours. I mean, that's cool, but
Well,
like,
yeah,
yeah.
I've got this is actually my headset from work. And I left my charger at the office. So I'm just hoping it doesn't die on me in the middle of this. And I'll have to use my computer mic, which sucks and is not clear. Also today I don't have my glasses. I don't know if I took them to my parents' house when I visited my parents over the week. I'm gonna have to check with them, but they're nowhere to be found. So
So you're just a mess right
I'm
now.
a mess right now.
Yeah,
Absolutely,
just
yeah.
just a hot mess over there.
Yeah.
Yeah.
Thanks for calling me hot, Dave.
That's all you took away. That's all he
Yeah.
took away from that was I was called hot today. You're gonna go back to Lindsay, say, "Hey Lindsay, I was called hot today." Um
Doesn't matter who said it.
Yeah, right. Yeah. I tell you what is crazy for me of all the things I've signed up for this coming up and all the things I'm putting myself through, I have no idea why. Uh, I get comments because they're like, "Oh, that's awesome. That's great that you're doing this. All these physical things I've signed up for, but yet I'm the one that has to crawl my body out of bed each morning and push myself. I have the discipline. It's not so backtrack. All these physical things I'm doing, right? I got a boxing match scheduled next year. I'm doing Paris High Rocks. I'm picking up skiing, going to be skiing in the Alps. All these things, physical, great, fun, yes. I'm pushing myself and sometimes a little too hard in order to do these. And give you my schedule tomorrow. My schedule tomorrow is I wake up and I have a 3 to 5 mile run. I got to come home, eat food, recover, rest, read. That's when I'm going to be reading, doing research, or
Hmm.
maybe some light cleaning around the house. Then at noon, I have another workout that's more high rocks oriented workout. Come home, eat, recover, rest. Then at 4 o'clock, I got a boxing workout. So I'll be at the boxing gym doing that. Come home, eat, recover, rest. And like that's my day is just three workouts, lots of recover, lots of research, do cleaning, different things in that time. But I need to be resting in between each so that my body can recover. I'm too old to be doing this, man. I That's a lot. And then Tuesday's the exact same thing. Tuesday, exact same thing. It's
Wow.
running, it's workout, it's boxing. And it's just every day that I can, I do this. And some days I do workout and then straight to boxing. So, whew, I don't know why I signed up to agree to all this, but hey, I'm going to be doing it. So we're doing it. I got the discipline. So back to discipline and motivation. So this actually goes to investing as well, right? So if you're motivated, you're like, hey guys, I want to really get into investing. I want to invest. That's great. Motivation helps. It gets you off the couch right away. Motivation doesn't last. After a few weeks, you're like, I don't feel like doing the research. I don't want to read.
Yeah.
Motivation does not last. Motivation is great to get you started. It does not last. Discipline.
Right.
Discipline keeps you coming and keeps you consistent and keeps you going. Discipline helps you finish reading that book that Brandon and I recommended, which, by the way, we have a recommendation coming up in the show. But discipline helps you finish reading that book that we recommended. Discipline helps you research every single day, like come home from work and you're dead tired, or hey, I just did 3 workouts today. I don't feel like doing anything, but no, I need to do my research. I got an option that I'm hoping will stay positive come Monday morning, which I don't think it will. I'm going to go negative on it.
I
Oh.
I used to hate when that happened. So when I
But
used to only
yeah,
trade options myself, and then I also had a regular job, I'd buy an option, set my limit, and then, hope that it would sell. And then I'd look down and I'd be like, add my limit to, make, 30%, and it's at 28%. And now I got to hold it overnight. That's so frustrating.
It is, and I hate holding over options over the weekend,
Yep.
especially. But on Friday, I was up 50%. Very happy on my option. I don't think it's gonna. I think I'm gonna go negative Monday morning, unless some news breaks overnight, which I'm hoping is the case. But anyways, we'll get into that in a minute. But yeah, discipline. I can't stress that enough. You have to be disciplined with your investments, disciplined with your options, disciplined with everything you do. If you're not disciplined, you're gonna lose money.
Right.
So you got to be disciplined and do your research, and read the books. Learn about the history, learn about economics, learn about how things work, what this ratio is versus that ratio, what this statistic is versus that statistic. You can't just use charts. Charts are just one piece of the puzzle to paint a whole picture of what's going on with a certain company. But
Right.
it's enough preaching. And I'm going to get off my soapbox here. We're going to actually talk about finance and investments for everybody who's listening. Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. You actually hear the live back and forth right here on the show for you. I know I just said I was gonna cover something really quick before you took over the show, and now I just so I have severe ADHD if you don't know. And so now my brain has already moved on to 50 other million thoughts and I can't remember what it was I was just a minute ago talking about I was gonna talk about. That is how severe ADHD works.
Yep.
I have never taken medicine for this. I've been diagnosed since I was age 5 before they were diagnosing everybody and their mother. So I really do have severe ADHD and now this is oh well, let's move on.
Do you have the anxiety that goes along with it? Out
No,
of
I do not have.
curiosity.
I
Okay.
weird. I have almost no anxiety whatsoever.
Okay.
And
So
it's
I've
weird.
got the ADHD, I've got ADHD, and I've got the anxiety that goes with it. So I don't take anything
I think
specific.
you have anxiety that causes ADHD symptoms, but I think
My,
you got that reversed.
well, my doctor said it that way, but um, I uh, I take anxiety medication. I don't take anything specific for the ADHD, but I take the anxiety medication, and it actually
Yeah.
helps with both.
Okay.
So I mean, it's something to look into. I'm on Paxil. Just
Well,
yeah.
yeah. Well, I mean, they said that my if I take ADHD medicine, which I've never had, but if I finally do break down and take it, it will actually help with my listening ability because I hear things and I don't hear things like I'll hear half of a sentence somebody said,
Right. Me too.
and it's not intentional. Like actively trying to listen. I just can't. I didn't catch like half that
Yeah.
sentence. I'm
Yeah.
like, can you repeat that?
So I have the same issues, and I'm gonna make my girlfriend listen to the first part of this episode so she can understand it's not just me.
I'm not the only one. See, this is a real
Right.
thing.
Well, you're in a conversation, you're always thinking about what you're gonna say next or what the other person's gonna say next. And
See, and
and it's
that's not
hard
my
to
thing.
focus on what's being said right now. Right?
So that's not my thing. So like I heard you 100%, right? But
Right?
I just had a piece of my table break off, and the only reason I heard you 100% is because I'm messing with my table that just piece of it just broke off. So I was distracted with other mechanical things, and so I was able to focus intellectually on what you were
Well,
saying. It's
now I'm
funny.
distracted by the fact that your table broke, a piece of it, and I don't like how
It's a
does a piece
decorative
of a
piece.
ta
No, it's
Okay.
a decorative
Okay.
piece. It's not had nothing to actually do with the stability of my table. It's a decorative metal piece, and I could fix it. It just needs a cotter pin that fell off and throw it back in there. I am very handy with my yeah. Let's do
Okay.
this.
All right. Let's get
Stocks
into
and
the investments.
investments.
Am I going first? Because I
You
want to
are.
go
Go
first.
ahead. Go
Okay.
ahead. You're going first.
I don't know if you know this or not, but the U.S. just had the largest number of job cuts for the month of October in 20 years.
I do know this,
Okay.
and the headlines. Do you know what the headlines all said? Because
What?
I watch CNBC, Bloomberg. I read all the news articles. You know what they all said?
What?
AI.
It's also 3 times more than last year, this time
And
last
they
year.
all said most of it was due to AI.
Okay. Yeah.
That's what
So we're in the
everyone, all the
beginning
articles,
stages
everybody
here.
was saying.
I wonder if yeah, I don't know though. I think it's more to do with sustained high interest rates and
I,
tariffs than it does have
uh,
anything
I
to do with artificial intelligence
no,
right now.
I disagree with that. I disagree with that because if companies are using tariffs the same way when the Ukraine war started, they were using Ukraine as a reason why they weren't hitting their goals. It's a company's not hitting their goals and they're using tariffs as an excuse. I want to actually see if they're going to say that and they're going to publicly say that. I want to see the numbers where the tariffs actually cost them more money and they had to cut jobs due to it
Okay, so
because
I did
most of
not
it's AI.
I did not do a deep dive into this. I was just looking over what's been said on conference calls, and Wendy's noted inflation headwinds, rising beef and labor costs. So they did say labor. That's going to affect future profitability. That's all
Labor
I have on
cost
that.
is
I
not
didn't dive
tariffs.
it. I didn't dive deeper into it. It's not tariffs, but I mean the beef cost is going to have some tariffs embedded into it.
Some, yes, and we there is U.S. beef. They could buy more U.S. beef and less foreign beef. That would also help with that. But um, yeah, we have a deal with Argentina to buy some of their beef now. Brazil sells us beef. We get beef from a lot of other places, even though we should have more than enough here in the United
Okay.
States to supply us.
So I say this when thinking that, we've been talking about the possibility of a soft landing or a hard landing over the course of the last like 3 years, literally.
Well, you have. I haven't. I said it was soft. I said we're great. We're doing fantastic. I just recently turned bearish.
Okay. I think we're going to see whether or not it's true in the next like quarter, 3 months.
All right, so you're copying my playbook. Gotcha.
But not copying your playbook because I didn't even look at your playbook. I think over the next 3 months, we're probably going to decide whether we're going to have enough to know whether we're getting into a hard landing or a soft landing. Within the
I
next three
agree, and
months,
I
we'll be at
believe
the
it's
depth
going to
of it.
be. I agree, and I believe it's going to be a hard landing, but not too hard. It's not going to put us into a depression or anything. It's just going to be a correction, which we are already seeing in the market, and then maybe like 2 to 3 quarters of negative GDP.
Okay. So we got most of Q3 in right now. So far, the best performing sectors, and that's probably where it's going to stay. Um, Aerospace and defense, 76.5%. As far as earnings go, earnings acceleration, 76.5% for aerospace and defense. Information and technology was 24.7%. Financials were 20%. That's all fantastic. I was very surprised to see the financials on there. I don't know how much of that has to do with
20% what?
earnings growth.
Oh, earnings growth. So
Yeah.
20% of all financials reported earnings growth.
Well,
That's actually
no,
that's actually
no,
bad.
no, no. What it is it's 20% earnings growth for the entire sector.
Oh, well,
So
that's
it's, yeah,
excellent.
that's
Yeah.
excellent. Yeah.
Yeah.
And 78% for aerospace information tech. I mean, I thought information technology was going to be number one here with leaders like Palantir, NVIDIA, so
Yeah.
on. But no, it's aerospace defense, 76.5%. IT was 24.7%,
Well,
number two.
come on. Defense
Financials,
spending, come on.
20%.
Defense spending
Um,
right now in this the geopolitical environment we're in.
well, we
I
got the
mean,
government. I mean, we haven't seen the quarter for the government shutdown yet, but I mean, that's
two years ago,
be definite.
Poland purchased more Apache helicopters than any other country in the world from
Boeing, wasn't it?
Boeing.
Yeah.
Yeah, it was from Boeing, and now they have the second biggest fleet in the world of Apache helicopters behind the United States.
Wow.
So you see a lot more NATO countries that have spent on defense spending, and they buy some of the stuff from American companies.
Yeah.
So the U.S. economy has benefited from increased geopolitical tensions. Unfortunately, yeah, that's not the way you want to increase it, but like you have seen an increase of it. Like we have ally partners that buy some of our Tomahawk missiles and other missiles as well.
Sure. And that's one of the reasons why GE Aerospace has been off the hook and one of the best investments I've ever made. Um,
Yes,
I
well, they make
love GE
excellent
Aerospace,
engines
love
and
it.
they
Yeah,
have some good deals. Yeah.
right. Now we're expected to see this slow down a little bit in Q4. Earnings are expected to come back down, I think, to like 7% total for the overall index. But if you look at the analysts, the calls for a return to acceleration of double-digit earnings growth for the next 4 of the 5 quarters. So we're going to have earnings decline a little bit as far as growth goes in Q4, and then what they're saying Q1, Q2, Q3 is all going to be double-digit earnings acceleration again. So analysts look like they're still on pace to or they're saying that we're still on pace for a soft landing is what it looks like to me.
Which I don't see where they're seeing the numbers for this. And here's sorry. So we have, you know me, I always have like who's coming up this week on earnings. There's a company coming up this week on earnings. I really want to watch their earnings report in particular because it's going to give a good idea of the strength of the consumer, and that's Klarna. If you're familiar with Klarna, it's
Yeah.
one of these like a buy now, pay later, layaway type systems for those of us who are older, layaway. But one of those type of companies, and I want to see kind of what they say, how many consumers are using it to buy things like their everyday groceries or pay their bills and
Right.
not just discretionary items, but what are they doing because they actually need this? Consumer
Sure.
staples. You
Sure.
know, are they buying toothpaste and they're using Klarna? Because that's where I'm concerned at, and that's where I'm concerned we're seeing. We already covered like 2 weeks ago, I believe it was. I covered the auto loan industry and the fact that a lot of auto loans are they're underwater. They
Hmm.
borrow too much. They can't make these payments. Defaults are rising. I want to see what Klarna has to say this week. I mean, if they report excellent numbers that they've increased their revenue, that's not always a good sign for the economy.
Right. Right.
That's not.
Right.
I'm sorry. Great for Klarna, not for the economy.
Well, you could take it two different ways. I mean, people are being forced to use Klarna. Um, if they don't have the regular income to support, paying what they want to buy, or maybe people are using Klarna because they're confident that they'll have the earnings in the future to pay it back. I don't think it's the second one because I don't
I
think
don't
that's how
think it's
most
the second
people
one either.
operate.
Yeah, that's not. I mean, who would want to borrow if you can just pay for it? No
Right.
one, no one's going to want to borrow if you could just pay for it. You'll just pay for
Right.
it.
Right.
Yeah, that doesn't make sense. I don't know. Maybe that's just
It,
me. Maybe I'm just more conservative with
you're
my
not
money, and I don't know. Because
you're
like
not a shopper. I mean, somebody could have a big purchase in mind and have the cash to pay for it, but they don't feel like they want to pay for it right up front. So, they'll gladly pay the interest on the back end in order to borrow the money.
what
It's
do you
not the
mean by
right
shopper?
financial
I'm not a
move.
shopper.
Well, you're not somebody who goes out like every day and makes purchases or every other day or you're not constantly looking for stuff. You're not somebody that back in the 90s would be at the mall every other week.
No. Yeah, yeah,
Yeah,
okay.
or
Yeah, I'm
every
not
other
a
day
shopper,
or
no.
whatever. Yeah, that's what I
No, I
meant.
usually I try to do clothes shopping once every so often. Because I was like I have my stuff. I mean, I posted like you and I went to the movie theater, right? We saw
Right,
Tron, right?
right.
So you see every that post, by the way, if you're on Instagram, you follow Chinchilla Picking on Instagram, you can see the picture of Brandon and I going to the movies. I posted out there just to show, hey, look, we actually do exist in the real world. But if you look at that hoodie in that picture, believe it or not, that's a designer hoodie that cost me quite a
Really,
lot of money. Yeah,
really.
right. I have a very low profile. I keep a low profile. I don't wear flashy stuff, but I do buy nice, expensive stuff when it's good quality and I like it.
Right,
And
right.
so like that's why I was like, what do you mean I'm not a shopper? I shop.
Well, okay, so let's move on here. The the fact that we're forecasting for decelerated earnings growth in the fourth quarter, coupled with the fact that a lot of people are a little bit worried about the inflated pot, well, they say inflated artificial intelligence trade, and that a lot of
It's
the
come down a
growth
lot. It's got
it,
deflated
it
this
is.
past
So,
week.
a lot of people saying we're probably going to see a 10% correction here. We don't know if that's going to be the case, but it might, right? So we got to start looking at ways to find values if that does happen. One of the ways that people look for value is they look at the price to sales ratio. And if the price to sales ratio is at or below one, they consider that a value stock and a possibility to buy. And it's just one thing that you look at. It's just one indicator that says, hey, this is worth looking into. Follow up on this and investigate everything else associated with the stock and with the company and see if you think it's something that you want to put in your portfolio. And what the price to sales ratio does is it measures how investors are willing to pay for each dollar of a company's revenue. So compare price to earnings or price to sales ratios within the same sector, for example, right? So if you're looking at healthcare, gross margins of healthcare, net margins at least, are typically pretty low. So healthcare companies are always going to have a low price to sales ratio, almost always at least. because they don't expect that those healthcare companies are going to be able to do much with the dollars that they make. So you're
Gotcha.
going to see low price to sales there, higher price to sales ratios with tech companies that are able to have higher margins. So it's not uncommon to see price to sales three, four, or even higher in the technology industry. And that doesn't necessarily mean that that company is overvalued. Again, when you're shopping for a house, you're comparing the price of your house to all the other prices of the houses on the same street or in the same neighborhood. You do the same thing with stocks
Gotcha.
because they're more comparable. That's more relevant, right?
Yes.
So it doesn't account for profitability, debt levels, or cost structure. So you have to use it alongside other metrics. But with the price to sales ratio, and there's a book that I reviewed a few years ago called What Works on Wall Street. And that has back tested all of these different ratios for like the past 75 years. And it has consistently came up in every test that the price to sales ratio is the most powerful measurement of whether or not a company is a good value.
What was the name of that book?
What works on Wall Street?
What Works on Wall Street?
Yeah.
Go buy it
Yeah.
now.
I can't remember the author off the top of my head. I think it's the guy that is the head of Oak Tree Capital, but I can't remember the author.
I'll
I should have
Google it
wrote
while
down the
you're
author.
covering. I'll
You can
Google it
Google
while
it.
you're
You can say
covering. Go
what it
ahead.
is, but I've read it twice. I just don't remember who wrote it.
Continue
Well,
with your thought.
well, okay. I didn't read it twice. I read it once. I cheated the second time with an
James
audiobook.
O'Shaughnessy.
There you go.
James O'Shaughnessy.
I think he's Oak Tree Capital. But anyways, doesn't matter. I read it once. I
Doesn't.
listened to it a second time. But anyways, I like to combine it with a PEG ratio because the PEG ratio tells me how much the company is projected to grow. And if we're really undervaluing that stock, if we're undervaluing their revenue and how much they can do with the revenue, then we're also going to be undervaluing most likely what they're going to do with their earnings. And if the PEG ratio can be lower, closer to one, below one, you're rarely going to get both below one. But if it's low with a low price to sales ratio, you're generally going to have a good buying opportunity.
Gotcha.
Yeah,
So price of sales below one, and you're
right,
looking at the PEG ratio is also close to
right.
one or below one.
So with a low price to sales ratio, there's a couple things that you need to look out for. So they're reflecting real problems sometimes. So it's poor margins. So people are willing to pay less for every dollar the company makes, but that's because sometimes that company is not doing well with the dollars that they do make and turning that into growth, right?
Yes,
So
reinvestments.
that's one thing that you have to look at. If growth forecasts are overly optimistic or based on shaky fundamentals, that's going to be misleading as well with the price to earnings growth ratio. So again, your research is required. This is not a one trick, one thing be all kind of thing where it gets you out of doing the work. It just helps you do the work.
And everybody's always looking for that one trick pony way to, hey, this always works. Let me pull up my chart. Even though I'm about to pull up a
Right,
chart later on in the show, let me pull up my chart and show you based off this. You see this flag, cup and handle, head and shoulders, dishwasher, wash behind the ears move here, and it's gonna be profitable.
right,
It's ridiculous. No, do
right.
your research, look at different things.
So generally speaking, what I would be looking at, because you rarely ever get the PEG ratio at or below one and the price to sales ratio at or below one. That generally doesn't happen. So I'm kind of looking for if the price to sales ratio is below one, I want at least a decent, PEG ratio. Doesn't have to be super low, but I want it to be like pointing to me, okay, this is a decent value. Or if the PEG ratio is way below one, I want the price to sales ratio to be decent and not overvalued. Citigroup falls into this category. PEG ratio is at 0.13. Like that's almost zero.
That's weird
It is
too.
super low, right? Financials have low PEG ratios, but 0.13, that's like statistically zero. That's like almost no earnings growth priced in there is what it seems like. But the price to earnings ratio is at 16.2. Price to sales ratio is at 2.4. So those two things aren't bad. Those are moderately valued, but the PEG ratio and Citigroup is in the middle of a restructure right now. So that's part of it. So people are kind of sitting on the sidelines and waiting. It's kind of a show me stock at this moment in the middle of a restructuring. But the investment thesis, I mean, we're looking at right now, we want to have a successful execution of the multi-year turnaround that they're in the middle of. Um, they've established clear financial targets here. They support the turnaround narrative. Management expects revenues to grow at a compounded annual rate of 4 to 5% by the end of 2026, coupled with significant annualized run rate cost savings projected to be in the range of 2 billion to 2.5 billion. The cost savings doesn't surprise me in the financial industry where everybody's diving into artificial intelligence to save costs.
Yeah.
What does surprise me is the compounded annual rate of 4 to 5% revenue growth, because that's actually pretty good for the financial industry, especially for a company that's been around for 150 years or whatever Citigroup's been around for. Um, so that's pretty good growth, and it's not judging by the PEG ratio. I don't think that's forecasted it into the stock. I don't think people have priced that in yet. So I think Citigroup is a buy personally.
Just based off these indicators.
Right. But I got a couple of more things I want to get into when it comes to Citigroup. For that, I got to give you some definitions. So let's not be too boring with this, but I'm going to try to give you some definitions here, all right, for you to understand what I'm about to say. Um,
Education time with Brandon.
yeah. So when I talk about a tangible asset, that's a physical asset, right? So if somebody owns a company owns like 40 forklifts or something like that, those are tangible assets that can be converted into cash. Intangible is something you can't see. So that could be software, even though I would consider that tangible these days.
Patents.
It's not, but they consider intangible patents and any kind of intellectual property, patents, copyright, all that stuff. Brand loyalty, brand capital is even
Yep.
intangible asset. Um, so that's what I'm talking about. When I talk about return on tangible common equity, they're talking about return on the assets they own, the physical assets they own. And this is often used in the financial industry that measures a company's profitability by showing how much net income it generates from the tangible common equity, the stuff they own, that's physical. Um, it's calculated by dividing the company's net income by its average tangible common equity. It provides a clear performance of the efficiency by removing intangible noise, one-offs, and such like that, and things that you can't particularly touch. Um, so that's what we're looking at with Citigroup. You really need to look at return on uh, tangible common equity, which they're targeting to level out at around 11%, which is pretty good.
Yeah, that's 11%. Okay.
So that's
I
what I
like
want
that.
people to look at. If you buy it, watch that earnings report, see if they're hitting that goal.
Also see where they're at in the restructuring. I mean, that's a big
Right.
deal too. If you're restructuring
Right.
the whole company, I mean, where are we going? What's
Yeah.
the new viewpoint? Where's our new mission?
And what's the timeline on that? But what we're measuring the effectiveness on this on revenue growth, 4 to 5%. We still want to see positive earnings growth, obviously, and we want to see that return on tangible common equity at 11%, 10 anywhere between 10 and 11,
Yeah.
really. So
Nice.
I made my call here, right?
I
Um,
like that you're making more calls than I am now lately.
yeah, sometimes I hate to do it because Citigroup, it's like I'm not excited to buy it, but it's a
It's not a
value,
sexy stock. It's not.
right?
It's not. It's something that's
Right.
boring, but it might, it's like a Campbell soup. It's going to make you money.
Right. I think it will. Yeah, I think it will. I'm down on Campbell's Soup right now. It's one of the three stocks that I own that I'm in the red on, but
Wow.
but I haven't held it